Hello and welcome to today's NinjaTrader ecosystem event, the S&P Roadmap. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking the Get Started under the Welcome section. Before I turn the mic over to Justin, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Justin.
All righty. Thank you so much. Thank you for having me here. And I really appreciate all of you for coming out today. We're going to go ahead, and it's been, I think, probably almost a year since I did a presentation for NinjaTrader here that actually got broadcasted and shared on YouTube. So it's great to be back. And again, thank you guys for being here, joining me for the next hour, where I want to share with you guys how I plan for the S&P 500 market open, how I map my charts out, and kind of get a trade plan for the day. I started a service called the S&P Roadmap just about a year ago now, maybe just over a year ago. So you can find more about what I do at www.sproadmap.com. And without further ado, let's jump right in. So we already covered the futures trading risk disclosure. Hopefully by now you guys understand that trading futures or trading anything is pretty risky, right? And you could, in the futures realm, end up losing all or more than your initial capital. So make sure you understand that this is a tricky endeavor to tackle, and everything I share today is, hypothetical, educational purposes. I'm not giving you any type of specific investing advice. So why would we have a pre-market planning session? It should be pretty self-explanatory, but for the most part, we have them listed out right here. We want to develop, I think is probably the better word. We want to develop a set of conditions to trade within during the trading day. So I'm sure a lot of you, if you've been in this industry for even a short while, you guys know you look at the charts before the market opens, everything kind of makes sense, or at least it might have some good ideas. And then the market opens and you get this increase in volatility and volume, and the market starts moving all over the place. And the next thing you know, you're doing something that you didn't originally plan to do, and you're getting lost inside of all the movement. Rather than doing something like that, it makes a lot more sense. You're going to have better results. You're going to have kind of a consistent plan that you follow every morning. It's going to make this a much easier thing to navigate, right? So we want to have conditions for our trading to trade within. We want to find trouble zones for the bulls and the bears. So strong support and resistance levels in the market that we can hang our hats on as places where we would expect there to be rotations and be great places to look for trade opportunities. And then finally, I always like to establish some type of high time frame context and high time frame signals that might help bolster a certain bias or direction that we have for the market. So how do we do it, or how do we do it here at the S&P 500 Roadmap? First and foremost, this is what we talk about every morning. Make sure we have the times of announced news events mapped out on our short time frame charts, right? So that's another thing. You get the market opens, it starts moving, you start getting excited, and then all of a sudden you go to get into a trade, and then bam, the whole volatility spikes. The market jumps 20 minutes up, 20 minutes, 20 points up, 50 points down, 100 points up. And you're like, what the heck just happened? Make sure you know that these big notable news events are coming up, and make sure you have them on your chart. So what I usually do, and I don't know if I can bring this over on top. Yeah, I can, is I'll go right onto my tick chart, right onto my 1 minute, right onto my 3 minute, and I'll actually put a horizontal line right at the time of an expected news event, right? And actually, we're going to go through all this, so I probably don't even have to share that right now. But first and foremost, get those times on your chart, right? That way, you know if you're about to enter a trade, whether or not you might have some jump in volatility, or if you're in the middle of a trade, maybe you should be careful. Okay. And then what I do is, after I mark those news events on my short time frame charts, is I jump to the higher time frames. And you see here I put read and interpret what the daily and weekly candlesticks are saying. I also actually jump one more time frame above that, and I go up to the monthly as well. So the daily, the weekly, the monthly, and then even down on the 4 hour, just below the daily. I want to look at what the candlesticks are telling me to help me, again, build up this structure of what I want to do once the market opens. And we'll get into that. What I'd like to do is just share kind of the basics of how all this works, and then go to the actual live charts, and we could maybe do kind of a mock pre-market plan, kind of pretending like we are just about to open right now, just as the market's actually closing, right? So we will go ahead and go to the charts and do all this stuff so you can see it, not just on a theoretical list here. Then I want to ID and mark the most relevant high time frame where you see MTF is multiple time frame signals. So a lot of times we'll get a signal on, say, a daily chart, and that daily chart signal will end up turning into like a 250 point push on the S&P, right? Plenty of opportunity to make money. And this signal that might start to show up on the higher time frames is giving us clues that there is potential for a larger move in the market, right? So we'll take a look at that when we get to the charts as well. Then I like to map out the larger Fibonacci legs, right? So if we're looking at a zoomed out chart, there's going to be very obvious, at least if you've spent a little time analyzing with Fibonacci, you're going to find some very obvious Fibonacci legs that you can use to map out some of those retracement levels. And so that's another thing that I like to get on the charts before the market opens. And then I want to map out relevant levels, right? So once we get some context from the higher time frames, once we see what the monthly, the weekly, the daily candlesticks are telling us, maybe what some signals might be saying on those higher time frames, now I actually want to start to map out relevant levels in the market that could end up becoming contention for the bulls or the bears, depending on which direction price starts to move. And I typically stick to the 60-minute chart at that point. I am looking for major swings on a 60-minute chart, not on the daily or monthly or a 10-minute chart. But the 60-minute chart is where I kind of stay. I anchor myself in between the high time frames and then the lower time frames, right? So we'll go and I'll show you how I do that as well. And this is kind of where we're going to find those little areas in the chart where we do have some good areas, and I got to watch my words here. You're going to find good areas where price could very well get a rotation, and you could find a great trade entry, okay? And then finally, once all that's done and we're getting ready for the open, we'll jump down to those short time frame charts. For me, my short time frame charts are a 512 tick. I know some of you probably think I'm crazy. And then a 3-minute chart that I put right next to it. And that way I have kind of a little zoomed in view of my charts that I can then find trade entries on. So that's the basic gist of it. Now let's continue here. Once we have all those levels and signals mapped out, now we can kind of create a bias or a trade plan for the day, right? So based on what happens, remember, the market is fluid. It's always changing. New information is coming in, especially with the S&P 500. We have global news. We have local, national news, domestic news, all this stuff all affecting the movement in the market. We have relevant economic factors, all these different things. We have people speaking, whether if you guys remember just a couple of years ago, the Trump era, when the market would just whip 100 points up and down all day. It was kind of a fun time to be trading, but also somewhat dangerous because out of nowhere, Trump would make a tweet and the whole market would get some crazy jump in volatility, and you just had no way to predict when that was going to happen, right? So it was kind of fun, I have to say. So we want to have a plan, right? We want to say, hey, look, if this level holds, maybe this is something that bolsters our bias for this type of direction. Because it's always changing, right? We need to be able to adapt to these new conditions and trade accordingly when this new information is coming in, when the market is changing, and maybe it's doing something different than what you originally expected. So this means we need contingency plans for when things just aren't happening the way we expect, right? So we'll have a plan for what we might expect to happen given maybe some type of signals that are showing up on higher time frames, and maybe some relevant levels that we've mapped out are actually holding. Those are things that are going to give us clues as to whether we want to follow one part of the plan or maybe just reject that whole thing because the market is showing new information and then start trying a different, right? So remember, trading is just if-then statements over and over. If this level holds, then we'll do this. If that level doesn't hold, then we should try this. Given the perspective we have from the higher time frames, and then from what's happening on a shorter time frame based on levels. And that's it. That's my whole presentation, guys. No, so this is really just kind of the general idea. I know it's pretty straightforward, but I think sometimes people forget, right? They forget, they're excited for the open and they just don't spend the time to actually look at the charts and look at the clues, because the charts are going to give you clues as to very important areas in the chart, or very important areas for rotations and for all kinds of stuff. So let's go ahead and I'm going to pull up my higher time frame charts now, if I can find it. And I think it's just right behind the presentation. There we go. So let's go ahead and just conduct a pre-market plan, kind of pretending like we're coming into the open right now. I know we do have, 15 more minutes until the extended trading hours close here for the futures, the S&P futures. But we'll just pretend like this happens to be, say, Friday morning. Now, caveat to this whole thing is understand that the overnight session is going to start to give new information that could completely change the perspective that we have right now. And that's what ends up becoming an issue for me. Sometimes I like to put together a morning report. In fact, every morning in my service, which we'll talk about, I print out a daily report with all of our levels and everything. But what I find is sometimes I'll put a report together, say 2 hours before the market opens, and just in an hour and a half to 2 hours, the whole perspective can change, right? We could have a bias for an expectation of a push higher, and then something like this happens, and we get a reversal pattern up off the highs, and that gives us a change in perspective. So you always have to understand that the market is constantly changing, and when certain levels are being respected or they're not, or new signals are printing or new price patterns are printing, that needs to fuel your new perspective on the market. So what I'll do is I'll jump up firstly to my monthly chart. This is like a super zoomed out perspective, a bird's eye view of everything that's been happening for multiple years here. And if you notice, I've got some signals here on the chart. I've got some bearish signals that just so happen to be forming here right off the highs of 2021. I've got some bullish signals down as we made lows in 2022. There was a great bearish setup that happened right at the end of July going into August of 2023 that led to this beautiful like 5, 6, 700 point pullback at the time. And then finally, my members should remember back in October of 2023, in fact, the day before, on the day of Halloween, we were talking about, in a couple of days leading up to it, we were talking about seeing potential on our monthly chart for a possible bullish rotation, despite the fact that we were in a pretty strong sell-off. And a whole bunch of stuff started to show up back at the end of October there. And on the morning of Halloween, I gave you guys that green light that looks like we very well could get some type of major rotation, some type of Halloween rally coming into the end of the year. And sure enough, guys, here we are over 1,000 points to the upside. The reason I'm looking at these higher time frames for signals is because when these signals do end up holding, we know, or at least we have some clues that we may be at the beginning of a major rotation in the market. And that then helps bolster our trades and our bias for the trading day. So I want to look for these signals, and I'm kind of maybe going out of order a little bit from the bullet points we just went over, but I'm looking for two things. I'm looking for those potential signals that might start to form, and I'm looking at what these candlesticks in the most recent past are telling me, right? So before we came into March here on the monthly, this is how the previous month closed. Very, very strong. No indications for the bears. I didn't quite have any type of bearish divergence when we finally started to break out to the new highs here and they opened into the new month. We were pushing to new highs compared to the previous swing. The RVI down here was pushing to new highs. And by the way, guys, I apologize. I haven't shared everything about my trade setups or about what indicators I'm using because today is mostly about creating a pre-market trade plan. But down here, the only indicator you're going to see on my charts is RVI, Relative Volatility Index. And I may even be able to just draw that on the chart if my screen thing works. It seems to be kind of shoddy for some reason. I'm not going to be able to draw that on the chart right now, but just understand this is RVI, Relative Volatility Index. It works almost exactly like RSI. It's an oscillator. You can find divergences on it, and that's what these signals are. These are divergent signals between price and relative volatility index. And RVI is, again, just it's nearly identical to the equation for the way they calculate RSI, relative strength index, with just some minor tweaks to it. So this is what I'm here on the monthly here, what I see. Part of my bias coming into the open is that we're in a very strong market. I don't have any overt clues for the bears currently on this monthly chart. And then I also like to see where we are relative to 50% of the previous close candle. Because a lot of times that ends up becoming a great line in the sand for a bullish or a bearish bias. And you're going to see that this is the trend as we go down to the weekly, the daily, the main high time frame charts. I want to know where that 50% level is because it helps me in creating a bias, especially when we're starting to come down below it or get above it, right? So right now, as you can see on the monthly, no sign for the bears, very strong, and we are way above 50% of last month, right? We didn't even come back to test it when we came into the beginning of March here. I jump down to my weekly. And if you notice, here's the low of October of last year, also gave us a bullish signal on the weekly. So as you can imagine, when we came into the markets at the end of October here, we saw potential on the monthly and the weekly for the bulls in terms of a divergence signal. And so this right here, these two potential bullish signals we saw were one of the reasons why I warned my traders that there's potential for a much larger rotation back up, right? And as you can see, pretty good so far. Now on the weekly chart, no major signals ever since the low of October, right? We opened into November here and the market just ripped on higher, broke the all-time high from what, 2021 or whatever it was, and went ahead and continued to push to new highs. And as we do that, we're just pushing high on RVI and everything looks hunky-dory for the bulls. However, last week, if you look at the candlesticks, we were getting clues for a potential pullback, given the fact that we had a lot of large wicks to the upside, right? And I'm not going to take time to get into the minute details of my strategy and all that. But when you have major wicks to the upside or to the downside, they are typically at the beginnings of rotations in the market. It doesn't mean it works every time. It doesn't mean every time there's a rotation, you're going to have a large wick to the up or to the downside, depending on what direction you're in. But it is something that you will typically see. You see this major rotation here, this major rotation here, this rotation here, right? Nearly every rotation that is around these areas has a major wick to the upside, and for the bullish side. And then when you're on the bearish side, a major wick to the downside, typically a clue that the bulls are recovering and could push the market back up. So if I'm looking at my weekly chart here and we're coming into this week, seeing this type of price action, see these type of candlestick formations, gives me that a little bit of a clue. And as you can see, being below 50% of the previous candle is only bolstering my argument, right? Now, we came into this week, and you guys know it was meandering back and forth inside of the previous two weekly candles, and we had all of this bearish information from the candlesticks. It gave me somewhat of a clue that if we could break below the low of this candle right here, then I was going to become much more confident in a bearish pullback, a larger bearish pullback, right? But what ended up happening this week is we meandered back and forth right inside of the last 2 weeks of price action, and the bears were never able to get down below 50% of that previous bearish looking weekly candle. So it kind of got down by a couple points, but then recovered and chopped. And then finally, you guys know what happened yesterday. What we had yesterday was a news event, right? We had the FOMC announcement in the afternoon, right around 2 p.m. And what do you know? Right around 2 p.m., 2:30 p.m. Eastern, the market broke out to the upside. So all of the bearish clues that we had up from the highs, giving us some confidence that maybe if we could break the low of this previous week, we would get a deeper pullback. We never met those conditions, right? The conditions for the bearish side was to get down through 50% of that previous candlestick and get down through the low. And then we have confidence that this is the beginning of a potential larger rotation lower. But we never got it. And the bulls jumped right back in. The relentless bulls that have been pushing for month after month now just jumped right back in after the FOMC announcement and popped us to new all-time highs. All right, so this is what I'm seeing now. Now I'm seeing a push to new highs. We got our RVI rotating back up at the moment. And really, in my opinion, just not a lot of major clues for the bears just yet. Now, if this weekly candle ends up closing and we have a lower high on RVI, and then we break down through 50% of this candlestick coming into next week, which would be somewhere around 52.40, 52.50 in there. Well, now we have our check mark for a potential larger bearish pullback. But we don't have it right now. We got to wait for this candle to close. And as you can see, in relation to last week's candlestick, we are way above the 50% area. So things look very strong from the weekly perspective, okay? The only signal I have on the weekly right now is a bullish signal from the low of October of last year. Same thing on the monthly. Once I establish that things still look strong on these two higher time frames, I then come down to our daily chart. And on our daily chart, we might start to get some clues for some smaller rotations in the market. And as you can see, for the last couple of weeks leading up into contract rollover and going through the week of contract rollover, it has been a super messy situation. We kept getting all these bearish clues as the market was pushing higher. You can see the divergences I was marking. And every time we got one of those signals, I told everybody, hey, look, we've got another bearish signal, but it seems like every time that happens, it's just a very short-lived pullback. And then as quick as they're pulling it back, the bulls are jumping right back in and popping it to new all-time highs. So you had to be careful, even though there were bearish signals from highs, you had to be careful on kind of hanging your hat that that was going to be the beginning of a huge rotation. What we wanted to see in a lot of these instances was we wanted to see the bears get through 50% of the previous week. And that happens to be these purple horizontal lines on the chart. So the first signal for the bears showed up. They pulled back. They couldn't even get to 50% of the previous week. And then they printed a bullish signal and then popped to the next. And then next day, the next week, they kind of got through, but then recovered right back above it and then popped to a new high. Then we got another bearish signal. Broke the low of the signal candle. We were actually bears back on March 11th, but then the bulls recovered and then got back through 50% of the previous week and popped to another high. And so we've just been in this really tight back and forth market, obviously trending higher, but it's been a little tricky because we get lots of clues for the bears from the highs. In fact, all these highs where we had bearish clues for the last couple of weeks, look at the weekly candlestick. All of this attempts to break out and then pulling back. Attempts to break out, pulling back. So we had a lot of clues that it would make sense for a pullback. But what happened? FOMC hit yesterday. Now here we are back to new all-time highs again, right? So coming into, let's pretend like we're coming into the open this morning. The daily at this moment doesn't necessarily have a major bearish divergence off the highs, and we are pushing to new highs, and we have a nice, strong previous daily candlestick here, right? So 50% of that previous candlestick, very important thing to be aware of for the type of trade plan that we put together in the S&P roadmap. Because if price can hold above 50% of the previous daily candle, it is a clue that the bulls are still in power, right? So 50% of the previous week are magenta lines here, and 50% of the previous day, which you will see down on the hourly chart as this other magenta line, those are very, very important lines in the sand for bullish and bearish biases. And so that is a major part of my trading system. So coming into the open so far, looking at candlestick formations and looking at any signals that either have printed or are potential signals, we just have a lot of clues for the bulls and not a whole lot of clues for the bears so far. Now, if you're in my trade room, you definitely know that there's a caveat to everything. And the caveat is that anything's possible in the market. You don't have to have a signal in order to have a major turn. It's just that those signals are typically there when we get larger rotations in the market. And I actually haven't marked anything much past right here because we're on the new contract now. So I have to build out the old signals, but there was a beautiful signal right there as well, right off that low. These signals typically lead the rotation, so we do want to be aware of them, right? Doesn't mean they're there every rotation, but they are there. A preponderance of the rotations we have these signals. So right now, I don't see any major bearish signal up off the high. We haven't pulled back and broken through 50% of the day before. Things are all looking hunky-dory for the bulls up here on these higher time frames, right? So that's kind of how I start my pre-market. I want to take in the bird's eye view. I want to see if the higher time frames are hinting at or cluing into some potential rotation given my signals, and then given maybe what the candlesticks are saying on top of that as a second layer. Once I have that basic bias on the higher time frames, and then finally I go to my 4-hour, which is kind of the intermediary between the higher time frames and the smaller time frames. And it's also, like I said, or I haven't said yet, but it is also the 4-hour signals tend to lead a lot of these smaller micro rotations that happen throughout the day. So little intraday market rotations will typically have a nice 4-hour signal that leads the push. Now, again, caveat is it's not necessarily there every single time there is a rotation in the market. However, it is there more often than not when we get these turns, right? So just so happened this morning, we pulled back and we had our roadmap level here at 52.33, and that should be 33. And we pulled back to it to the tick. And at that moment, we had a potential bullish signal going on. And then we broke right through the top end of that candle where we had the potential signal. So it confirmed right around the time that we broke out for the news event yesterday, right? So once we started to break out, you could have come down to your 4-hour and said, hey, look, not only are we just breaking out of a major resistance area, but we've got a 4-hour bullish signal bolstering our move, giving us more confidence that this could turn into a pretty strong rotation back to the upside, right? So on the 4-hour, I'm also doing the same thing. What are my candlesticks telling me? Right now, previous candlestick was pretty bearish looking, right? Big wick to the upside, obviously red candle, and we just broke down below the low of that candle, which I call my signal candle. And so we've got some confirmation for that bearish side. Now, in terms of a signal up here, no, there's no major bearish signal, but we do have a bearish candlestick formation, and we are breaking down through the low of that candle. So that gives us, from a shorter time frame perspective, some faith in an attempt to break lower. Okay. So we put all that together, and on the report, I kind of summarize it all into some type of synopsis. So some days will come in and every time frame, 4-hour, daily, weekly, monthly, they're all agreeing on a specific direction. And I call that like when the stars align. And it does happen more often than you would expect. You have these days where we come in and there's just a preponderance of clues for a one direction, right? And it gives us a great bias to play with as the market opens. So once we get all that together, now we have clues. And like I said, sometimes everything lines up. I have a bearish daily signal with a bearish looking previous candlestick. I've got a bearish 4-hour lining up with it. I've got my weekly showing some clue for the bears. Maybe it looked like this last week. And everything's lining up for a bearish setup. And then you get the rotation, right? Now, the opposite of that is you have everything lining up, and then the complete opposite happens. And that's why I said in the presentation here just a couple minutes ago that you have to be ready for anything to happen. So if you have, here's a great example, and I'm actually glad that this happened. Coming into FOMC yesterday, we had a lot of clues for the bears. We had this really bearish looking 2 previous weekly candles. We had the daily continuing to print bearish signal after bearish signal as the bulls just kind of inched a little bit higher with each push. And we had the 4-hour also, I believe, showing some bearishness from that previous high and from the overnight high coming into yesterday morning. In fact, there should be a red indicator there. But the main thing is we never were able to break through the low of the signal candle there. So that's kind of why I didn't mark it, because we had the potential signal coming into the open, but then the bears were never strong enough to actually pull it down below that area. So technically it was a bearish signal, but it never got any follow through. So as we came into the open, we had potential bearishness on the 4-hour. We had the daily showing a bunch of bearishness from the high, the previous high. We had the weekly showing all this bearishness up off the highs. And so coming into the open yesterday, before the FOMC announcement, it looked like it made sense for the bears to pull the price back. Okay. Now, the first stipulation or the first condition we wanted to see to have any faith in a bearish pullback was for the bears to get through this level right here, 52.33. So we were building up a trade plan saying that if price can get below 52.33, then we will have more faith in a deeper pullback to test into, and I believe it was, let's go over to the hourly here, pull back and test into 50% of the previous day. So if we could get down below 52.33, it was a good bet that price was going to make it down to retest into 50% of the previous day. Well, what happened? The market opened yesterday. It literally chopped around inside of the overnight range. And then what happened? They came right down, tagged our level that we wanted to see the bears get below, and held above it there with an hourly and 4-hour bullish signal, and FOMC dropped, and bam, we got this huge rip higher. So our bias to the downside coming into the open was negated when we couldn't even meet the first condition for the bears. And the first condition for the bears was to get below the overnight lows and get below our major market roadmap level. And then we could target down to 50%. Understanding that we did have a major swing high in front of it. Okay. So that's how we're kind of putting together higher time frame candlesticks and higher time frame signals in order to kind of set ourselves up for a trade plan coming into the open. And then we're setting conditions that if they're met, we can actually follow through with our trade plan. If those conditions are not met, then we need to potentially consider the opposite, okay? Now, there's one other thing I forgot to talk about in terms of mapping out levels on the chart, and we haven't even gotten to mapping levels in the chart out yet, and I think I'm almost 45 minutes through my presentation here, and I apologize, but there are some levels I now want to consider. Once I have my trade plan for signals and candlestick patterns from my higher time frames, now I want to come down to my hourly chart and consider what are some of the most relevant levels on the chart to rely on. And those levels are going to include Fibonacci's. So I mentioned we want to map out major fib legs. So if we go up to the higher time frames, you'll see a lot of times these major fibs are getting respected. So we want to be aware of Fibonacci's on higher time frames as well. Of course, on the daily, the problem is there haven't been enough pullbacks or anything for any relevant Fibonacci action other than this pullback back at the end of February. And you can see here, if we go back to the end of February, we pulled back right to the 38% retracement of the leg up. And notice the market bounced right off one of our major levels, pushed up, pulled back, and it held the 38 retrace. Go ahead and continue pushing to new highs. So I want to be aware of fibs. It's just that right now, there's just nothing that I want to talk about in terms of how close we are to price right now. And I don't have enough time, given that the clock is ticking down right now. I don't have enough time to get into the intricacies of how and why I would draw fibs off of different legs on the market. Okay, just is what it is. I don't have the time. But there is a lot of YouTube videos where I do explain this information. So feel free to go over to the YouTube channel if you do feel so inclined. So let's look at levels. First things first, we start with our daily power levels. So I do have an indicator that prints all these levels for me. It's basically just an open, high, low, close indicator. I want to know the high of the day in red. I want to know the low of the day in green, which, by the way, the low of the day of the previous day is that 52.33 roadmap level that we put on the charts before that market ever opened yesterday. And then I want to know 50% of that range. I already talked about why we want to be aware of that 50% line in the sand there. And this level is an incredible level. We see rotations off of that very, very often, right? So you can get actionable trades off 50% of the previous day. And this is a range that, remember, encompasses the extended trading hours, the ETH. This is not a chart that's based off of only regular trading hours, only the New York trading hours. This encompasses the entire 23-hour futures market, okay? So we've got 50% of the previous day. We've got the high and low of the previous day. We have the close of the day before, and that's the extended trading hour close. And then one proprietary level, which is my holy orange power level, the HOPL. It is a pretty incredible level. Just as a beautiful example, just to show you I'm not cherry picking anything here, just this morning, and this happens so often, you can talk to anybody who's been in the community here, how often do we get major rotations right off that holy orange power level? This morning, the market opened, it pulled back, and the low of the morning, nearly to the tick, was the holy orange power level. And it actually touched it here 3 times before going ahead and getting a pretty decent 10, 12, 13 point bounce, right? So there's a reason we watch the holy orange power level. And there you go. It's actually parrying right off of it right now, coming into the close. So, or just before the close here. So that level, very, very, very powerful level. We see the market rotating off that level very often. It's not going to be every single day, but it is has enough of an edge to it that a lot of days, if I see us traveling away from it and then coming all the way back up into it, I know there's probably a great trade opportunity right in that area. Again, this morning was a perfect example where we pulled back right to it after the open and literally bounced for that 10, 12 point bounce or whatever it was. I don't know where it is on here. So we have those first few levels, high the day before, low the day before, 50%, hopeful, and the close of the day before. Close of the day before, my friends, also a very incredible level where we'll see price get away from it, come all the way back, come right to it, and sometimes right to the tick, go ahead and get a major rotation right off of it. So these are the first major levels I want to be aware of when I come into the open. Then I want to zoom out a little bit on my 60-minute and see where are the major swings on a 60-minute chart that haven't been tested. So these are naked swings in the market. You're going to see them basically because you have either a big wick to the upside that fails, and then we leave that area and we come back and it's never been tested before. So that happens to be the major all-time high back the beginning of March, and then the slightly lower high back a couple days later. Those two are naked swings that we broke out through and just have not come back to test. So I want to make sure those are on there. They're not necessarily there every day. Every day for the last couple of weeks, we just haven't had a lot of pullbacks. And we also just haven't had a lot of naked swings to the upside to consider if price was pulling back into some of those levels from the upside. So we don't have a lot of swings coming into the new contract here, but the two that are relevant right now is that old all-time high from a couple days ago, and then this failure just a couple of days later. And so that also was lining up with one of our roadmap levels that we've had on the chart for a couple months now, or however long it's been. As the market was breaking out to new highs, we had fib extension levels up above us. We had one right here that we came up, and this was before the market had ever broken out to new all-time highs. We had a level sitting right there. That was the high of the day just a couple of weeks ago. We pulled back from it, and then we recovered, and our next expected resistance level to the upside was right here. And as you can see, once again, we came nearly to the tick to it, got a major rotation off of it, right? So this is one of our fib extension levels that we put on the chart, right? So we've got fib levels, we've got swings in the market, And then we have our daily power levels. That kind of builds out most of the levels in the chart. And then really last and definitely not least, we have our major market scaffolding levels. And these are levels in the market that over time, we see rotation after rotation after rotation. One of them that we're building out right now as we come into the new contract is 52.33, wherever that was, right here. And 52.33 has gotten a lot of major rotations from the bearish and bullish side of things. And that's what we do. We go through, and I don't have enough time. I'm pretty much at the end of my presentation here, but I go through and I don't have time to teach you at this moment, but I map out all of these major scaffolding levels in the market. And I call these scaffolding levels because they are basically the backbone of the market, where we kind of trade back and forth through these levels and get rotations off of them, sometimes to the discrete tick and over again from these areas. So I build out, and you can see it's like a lattice in the market, right? A backbone in the market where, or again, our structure, our market scaffolding levels, where once we get inside of them, we'll chop around back and forth and hold them nearly to the tick, if not to the tick. And then we'll hold them for rotations down, and then we'll come up and we'll hold them for rotations to the downside, et cetera, et cetera. And you just see nearly endless rotations from very, very specific areas in the chart. And these are my market scaffolding levels. And now I don't have scaffolding levels on the chart right now because we just moved into the new contract just a couple days ago. So it's going to take me another week or two now to slowly build out new market scaffolding levels customized to the new contract. Because as you guys understand, hopefully, as we move into and we shift into a new contract, all of the levels are going to have to be moved or shifted because the price is not the same as the previous contract that expired. So I will have to spend the next week or two building out my lattice, my structure, my market scaffolding areas where we find the most relevant rotations in the market. Okay. So once I have my scaffolding up there, which is going to be nearly permanent for the entire length of the contract until we get to June, once I have the scaffolding levels on there, I then look at my daily power levels. I look at any relevant fib extensions or retracement levels. I look for any major swings, and that's it. That's all I rely on. Now I have areas in the chart where it makes the most sense for this thing to rotate back and forth, pull back, bounce around, and basically trade inside of like a roadmap, right? So I have one final thing to mention before we get to our questions. So let me go back to the presentation here. I do have a service called the S&P 500 Roadmap. We started last year. We have daily morning pre-market sessions doing somewhat of what I did right now, although we go way more into detail. I didn't have time to actually really get into the crux of everything. We do it about 30 minutes before the open. I live stream my charts with signals on them throughout the day. And then we have weekly webinars. By the way, I did share our weekly webinar for the beginning of this year. I shared it for free on YouTube, so you guys can find that. And so we focus on trading education. We review trades. We do market reviews. We look at trade strategy. We talk about psychology, all kinds of topics, whatever is relevant for that week. We could have like a major setup in the market that week that we want to focus on and talk about. We've got about 20 to 25 of them already recorded and available to all members for all until there's no longer a YouTube, I guess. You would have free access to the market scaffolding levels if you're part of the roadmap and you're actually a subscriber. Now the goals to support you as a trader and give you the best available trading levels and signals to trade with. I've already showed you my charts. You can see where we're narrowing into major rotations in the market, probably the most notable being Halloween of last year, where we had all the clues on our higher time frames for a major push, and there you had it. We got a 1,000-point bounce. I also have a course, the 3-month trader training program. It's a 3-month long thing. You watch 2 videos a week. One video is like a classroom video for an hour and a half to 2 hours. The other video is an hour and a half to 2 hours of trading on the live market and kind of using what we learned in the classroom on the live market. You also get some one-on-one coaching, blah, blah, blah. So if you're interested, you can find all this information at my website. Again, the goal is to help develop you as a trader, give you the tools and the knowledge to help you achieve your trading goals. Most importantly, giving you levels that we know are very, very strong so that you can find good places to place trades and give you those signals that we're seeing that sometimes lead to major turns in the market. Now, if you want to get a free indicator, I do have a customized RVI zones indicator. You join the mailing list, and then I will send you an email with that free indicator. It's basically, and I don't know if I can pull it up, just this right down here. It doesn't print signals for you. It just has the 80, the 20, and then the 40 and the 60 lines, and it's the RVI stock RVI indicator for NinjaTrader 8. So you can get that if you want. I'll send it over to you if you join the mailing list. Finally, if you want to win 2 free one-on-one coaching calls with me, send a message to the sproadmap@gmail.com and include coaching raffle in the subject, and I'll get you on that raffle to get free one-on-one sessions with me. And then finally, if you want that JTF daily power levels indicator, which is printing the daily high, low, 50% of that range, the previous daily close, and our proprietary Holy Orange power level, you can go ahead and go to get a 10% off our indicator there. You would just go to the website, order the indicator, and use the code NINJA10. All right, so that's it, guys. Thank you for being here. We have just a couple minutes for questions. So go ahead, you can ask questions in the chat room, and I'll go ahead and try to answer some of them. So if there are any questions, we have just a couple more minutes here together. I think we have about just under 10 minutes. So if there are any questions, please feel free to ask them right now. And if there are none, we can go ahead and close this up. Let me just scroll through some of the questions here, or some of the comments, just to see if there were any questions that came up. Yeah, so I don't see any questions. I don't see anybody asking any additional questions. Hopefully that means I did a good job here in explaining what we do at the S&P roadmap, how we find major rotations in the market using divergence, and how I start to build out some of my trading levels on my chart. All right, so that was it, guys. We'll see what happens here coming into Friday. And the replay, I don't have an answer for that. Usually, NinjaTrader will go ahead and upload it once they go through their compliance information, have their compliance team review it. They'll go ahead and put it on their YouTube. So I don't know if maybe Chris, yeah, likely early next week. So right around mid next week, you should be able to go to the NinjaTrader YouTube channel and you will see this presentation. So again, thanks guys for being here. I do this every single morning for multiple years now. So it's kind of just part of my lifestyle at this point. And I'd love to have you guys here to capitalize on some of the signals and levels that I share every morning. So I think that's basically it. And we wait here for Chris to jump back up on the mic. I don't see any other questions unless I'm missing something here on the chat.
Thanks again, Justin, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of the S&P roadmap and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.